Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
I talk about this stuff, global macro, and people just think, "Wow, you're sitting there doing that stuff all day long," and there's some truth to that. I've been doing this a while, and I like global macro, but I wanted to show you this chart, and if you just, I won't go through every detail, but just to show you what we do, pretty much every day, and it's not that much. You can do it, and surprisingly, if you start to read like this, if you start your scanning like this on key sources that talk about global macro events and movements, and just keep it at that, and don't overwhelm yourself. You do this for a couple weeks, you'll be surprised how you start to get a feel of the way capital starts to move around the markets. And when you see asset class movements, you'll think of, hey, I just read something about it. And you'll start to interlink this stuff very, very quickly. It's really not that hard. I think the problem is people read the wrong sources of information, and they read too much information, and they watch too much TV. I refer to that, you see the last sentence down there, don't watch too much tout TV. That tout TV comes from Alan Abelson. I think I saw him coin it first in Barron's. Tout TV is the guys on CNBC, and again, not to vilify CNBC. I think they do a great job. They have to entertain. They have to give software out there every day. They have some very, very smart people and important people on that show. But just because of the nature of it, you have different views in and out, in and out, in and out, and it tends to confuse you because there's so many different views coming in, different time frames. It tends to be confusing. So just be careful when you're watching that. Too much TV. That's what I mean. Again, not to disparage what CNBC does or the other TV guys do. I think they do a good job overall, but we tend to just get too much of that stuff. I just point out one thing here. If you look at this and say, Jack, well, I'm looking at that stuff, but if there's any one thing on here that's going to help you get a global macro view right away, right out of the box, if you read it for a week, you'll be stunned how much you know compared to your investment friends sitting next to you anywhere. It's that Morgan Stanley Global Economic Forum. You go to msmorganstanley.com. It's free every single day. Their top global economists write and give their global macro view. We've been reading that for years and years, and I have my son reading it now religiously, and it's stunning how many currency ideas flow out of that, and it is free, and it's some of the best stuff you can get. So you can, if you disregard everything else on this page, take a look at that, and I think you'll find it incredibly valuable to helping you define a global view, not only in currencies, but the other asset classes that you might trade. Okay, say you were doing the reading that I just showed you on that earlier page. Is what we do every day. We try and do our homework every day there. Again, we don't get too crazy with it. We compare it with our charts. But what could you have garnered from what's going on in the world just by reading that stuff? And I'll go through what I want to do again. Just lay out a thought process. And I think the thought process of how to think about global macro flow as it relates to currencies and how to validate it really will help you to define your own system and really use these FX options in a way that makes sense for you as opposed to what my way is. But here's the thought process, and again, this is a fairly simple thought process of what you would have garnered had you read that stuff. The credit crunch. That's the key global macro event. As you're reading, I mean, we know that. It hit us right in the face. That's one that became evident to everybody. So what's been the fallout from that as we've watched over the last several months? Rising unemployment, obviously, in all sectors. Consumer wealth falling, the break in the housing market, the break in the stock market, massive hit to U.S. consumer wealth. And also it's scared consumers. It's scared consumers in the U.S. in a big way, and it's pushed up their savings rates from -2% in the midst of that dollar bear market cycle on the way down because there was so much money floating around the world. Credit was free. People could get money everywhere, so why save? The game changed. There's no money anywhere. People that need loans can't get them. Banks aren't given them to a large degree. Again, that's not all banks, but in general we're seeing that, and that's why you're seeing a big reserve balance on the balance sheets build up in banks. They're just not lending that money out. Obviously, standards have risen for lending, and they're trying to save themselves. So that's all part of it. Getting off the point here. Consumer savings is rising. We've gone from negative 2% to up to, I think we're close to 4 to 6% of GDP now in savings. That's a big shift. That's a major shift. That's a major change in the world. And again, if you did some of your reading, your background reading of that global macro event, you would know why that is so extremely important for global capital flow. It's because the U.S. consumer makes up 70% of the U.S. economy. If he's not spending, the U.S. economy is in trouble. But guess what? The U.S. consumer is also the driver of global demand. If you had to define one sector, one segment that drives global demand and all the stuff and all the money and all the goods and all the tanker ships running around the world, it is the U.S. consumer. And if the U.S. consumer is scared and he's going in a shell, guess what? We know it's going to have an impact on the globe, and it is in a very big way. Sentiment has changed. People are scared. No longer do we have the investment mania. People are not pumping money out around the world in the risky asset classes. They're keeping it at home. Again, that in and of itself is helping the dollar. If you just think of the consumer, if the consumer is taking his money and putting it under his pillow, it's not going into a mutual fund, an emerging market mutual fund, or a European investment fund. Dollars, by virtue just of that, you would say supply of dollars is coming back to the U.S. because the U.S. consumer is scared. We see that chain play out not only in the U.S. consumer, but U.S. insurance companies, U.S. pension funds, U.S. hedge funds, U.S. banking institutions, investment banks that have disappeared. Money has come off the table in risky asset investments and come back to the U.S. That's why the dollar has rallied in such a huge way that people tend to miss. It's driven, despite all the warts in the U.S., this change in consumer and a change in sentiment has driven money back home to hide. Well, why? It's a world reserve currency hiding in the deepest global financial markets, and the dollar has soared when the doom and gloomer said the dollar would crater in such an environment. They got the environment right. We've had financial Armageddon. They just got the investment side of it wrong. The dollar has rallied instead, and this is why. The credit crunch is the driver. It's the driver of a sea change in the global economy. The sea change is really, again, comes from this one factor right here. When you have a major sentiment change because of wealth being destroyed in such a massive way, you're not going to have Mr. Consumer running out and putting money to work again. Despite the near-term euphoria, people are afraid because they've watched their wealth be destroyed in a huge way very rapidly. And you have this rising. There's no security when this continues to rise. We think this is a major, this right here, as consumer savings will continue to increase measured in years. And if that increase is measured in years, then it's going to change the global macro environment. So that's all you needed to know right there, and think about it. And you would have said to yourself, there's a change in global money flow around the world in a very big way.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.